Hello and welcome to our channel. Today, we'll be discussing a topic that has been the subject of much debate in the world of finance. Can I take the place of traders in the stock market? With the increasing prevalence of AI and machine learning algorithms in the financial sector, this is a question that deserves a closer look. In this video, we'll explore the pros and cons of using AI in the stock market and examine whether it can truly replace human traders. To start off, let's take a closer look at what AI is and how it works in the context of the stock market. AI is a set of algorithms that are designed to learn from data and make predictions or decisions based on that data. In the stock market, AI can be used to analyze historical price data, news articles, and other financial data to identify patterns and predict future market trends. One of the main advantages of using AI in the stock market is its ability to process large amounts of data quickly and accurately. Unlike human traders, AI algorithms can analyze vast amounts of information in real time, which can give them an edge in making trading decisions. Additionally, AI can operate 24/7, which means that it can monitor the market even when human traders are not available. However, there are also some drawbacks to using AI in the stock market. For one, AI is only as good as the data it is trained on. If the historical data used to train an AI algorithm is flawed or biased, then its predictions may also be flawed or biased. Additionally, AI algorithms can sometimes make unexpected or irrational decisions, which can lead to losses for investors. Another issue with relying solely on AI for trading decisions is that it can create a black box effect. In other words, if an AI algorithm makes a trading decision that goes against conventional wisdom or human intuition, it can be difficult to understand why that decision was made. This can make it challenging to evaluate the effectiveness of AI trading strategies or to diagnose problems when they arise. Another advantage of using AI in the stock market is the potential for faster decision-making. With AI algorithms operating in real time, financial institutions can make trades more quickly and efficiently than they might be able to with human traders. This can be especially important in high-frequency trading environments, where even small delays in decision-making can lead to significant losses. Of course, there are also several challenges associated with using AI in the stock market. One of the most significant is the need for ongoing monitoring and maintenance of AI algorithms. As the market and economic conditions change, AI algorithms must be adjusted and retrained to ensure that they are still making accurate predictions. This can require significant resources and expertise, which may be difficult for smaller financial institutions or individual investors to manage. Another challenge is the potential for AI algorithms to make unexpected or irrational decisions. While AI algorithms are designed to make decisions based on data, there may be situations where the data is incomplete or ambiguous. In these situations, AI algorithms may make decisions that go against human intuition or market trends, which can be difficult to explain or understand. So, can AI truly replace traders in the stock market? While AI certainly has its advantages, it's unlikely that it will completely replace human traders anytime soon. Instead, it's more likely that AI will be used in conjunction with human traders to augment their decision-making capabilities. Ultimately, the best approach to investing in the stock market is likely to involve a mix of human intuition and AI-powered analysis. That concludes our video for today. We hope you found this discussion informative and thought-provoking. If you have any comments or questions, please feel free to leave them in the comments section below. And as always, thank you for watching.